we're planning to make full vaccination the condition of entry to nightclubs and other venues where large crowds gather.
I think the reality is for international travel, COVID passports are inevitable in relation to who's had the vaccine, how many doses, checking it.
We are practically pleading with people to please, if you're not vaccinated yet, seriously consider getting vaccinated.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 20th of July. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A big beat for UBS. The Swiss lender sees a surge in its wealth management and investment banking units in the second quarter. Stocks rebound after a brutal Monday as investors reassess the prospects for growth, while Bitcoin slips below the closely watched $30,000 level. And the U.S. raises its UK travel alert to the highest level, throwing doubt over its plans to reopen air routes. Singapore stops inside dining. So, good morning. A lot going on as these growth concerns have suddenly taken hold of the markets as investors now worry about this potential spread of the Delta variant. Treasury yields have fallen to their lowest since February, with a 1% mark now likely in sight for some traders. David Costin from Goldman Sachs says there's a specific type of company likely to do well in a decelerating growth environment.
A lot of the glamour stocks, many of whom are losing money now, but growing their revenues super fast. Now, I think those would be more at risk if rates begin to rise. And so the profitable technology companies is a big area to focus on. So big tech, but the profitable companies. A lot of semiconductors, some of the social media companies, some of the larger tech companies we can think of. Those will be the ones to be focusing on. They've done well. They'll continue to do well in a world of decelerating economic activity.
Well, we're joined now by Nannette Hechler-Fayd'Herbe, Credit Suisse's Chief Investment Officer for International Wealth Management and Global Head of Economics Research. Nannette, thank you so much for joining us, as always. So I'm not really sure I understand exactly what's going on in the market, because we knew about the Delta variant, we knew about growth concerns, and actually the market is always usually a step ahead. So is this a danger, Nannette, that actually what they're looking at is something different, that it's either double vaccinations not working as well as it can, or transmission, or something that's more sinister?
I mean, the market at the moment, especially when you look at the yields and where the bond market is going, is indeed pricing a certain concern about how the Delta variant and infection rates are going to affect, in particular, policymakers' restrictions on travel, on economic activity, even as vaccinations are perhaps not progressing as quickly as they should. And I still think, however, that this is likely to be a temporary phase, because vaccinations, if anything, are probably going to get more of a motivation for people to go and get themselves vaccinated, looking towards the next half of the year and indeed the entirety of 2021. Yeah. This is going to be a very strong year in terms of growth and inflation.
But so, Nannette, what is the market nervous about? Is the market, I guess, maybe just hesitant because it's difficult to see how we really get a grip on COVID-19? Or is it because they're just a little bit pricey at the moment?
I think generally speaking, the market, and just starting with yields first, is probably at a confluence of several factors. Number one, there is a lot of liquidity. And this liquidity glut is coming when there's generally a sense of frothiness in risk assets is going towards safe assets. This is what we have seen recently. But at the same time, the market is, I think, not really focusing on what is next, which is central banks' reaction to strong growth and especially persistent inflation that is spreading into more and more sectors. So there is a little bit of concern maybe to have also with respect to yields and where they're headed from these current levels. We think this is a transitory period and yields should be higher than where they're now.
So, Nannette, you think that, is it a summer months effect also? Because maybe the market is a little bit quieter. And what does a policy mistake look like? Is it the market interpreting that actually there will be some kind of monetary policy change before it actually happens?
Certainly, there has already been a repricing of monetary responses and guidance for the next 1 year, bringing forward some of the rates changes as far as the Federal Reserve is concerned, initially from late 2023 to now earlier, and perhaps even before the end of 2022, and also the start of tapering. Jackson Hole is coming up at the end of August and will perhaps shed a little bit of light in terms of the forward guidance there. We certainly expect at Credit Suisse that tapering, especially on the mortgage-backed securities, might start before the end of the year.
So, Nannette, do you have a call on treasuries? I mean, does the yield reach 1% in the short term? And then, where does it go from there? And how do you build a constructive portfolio given what we've just said?
I mean, to start with, I would really say that any investors that have liabilities in US dollars should seize this window and this anomaly that is, or perhaps period of just general lack of visibility by the bond market to fix their liabilities, because I would be surprised that yields stay as low as they are now. That's number one. But coming towards a portfolio, I mean, in terms of diversified investment strategy, for sure, people that look towards bonds as sources of income should definitely give an emphasis to credits over yields and maturities or duration risk in their strategy, as we think that these yields are probably not going to stay where they are. Alternative investments are very good to add because of the flexibility and the diversification that they bring to the portfolio. And then as far as equities are concerned, this continues to be the asset class that is really best equipped to deal with the overall environment that we are going to see even confirmed in the current earnings season, which is one of recovery across the various regions, also with earnings picking up strongly in emerging markets, for example. So equities, high conviction themes, high conviction regions.
But Nannette, are you worried that actually some of the equities will fall short if they worry about COVID long term? So at the moment, there's a reopening, a repricing, and frankly, many markets thought that we'd be over COVID-19 by now when you had critical mass vaccination. What if this lasts into 2023? Are there certain industry groups that you would stay away from?
I think for the first half, everything that was really the big COVID recovery trade did really, really well. And now that we are seeing the spreading of the variants, etc., these sectors are perhaps just coming to the end of their really strong rebound of the first half, where there is certainly more anchors to hold to for investors that are a bit concerned just for the short term is in dividend yielding stocks. They are a defensive way, and the earnings, that the quality and the strength of the earnings that are coming up are also really supportive for the payout of dividends.
Nannette, thank you so much. Nannette Hechler-Fayd'Herbe there from Credit Suisse joining us this morning. Now, coming up, a big beat at UBS. The Swiss lender sees a surge in its wealth management business. In the second quarter, we speak with UBS Chief Executive Ralph Hamers. That's coming up shortly, and this is Bloomberg.
The global supply chain is not working exactly as it should be. So that's one thing. So you see a bit of inflation there, but it's transitory, so it should not be a real concern.
Well, that was the UBS Chief Executive Ralph Hamers speaking after a surge in the wealth management business actually drove a 63% profit jump at the Swiss bank. Now, for more, let's get straight out to Zurich and to Manus Krani, who's been speaking with the UBS Chief Executive. Manus, great interview. Was there any sign of caution?
Really, not any sense of hesitancy. It's almost Churchill-esque. You've never had it so good. Now, he wasn't just as swaggering with that, but what Ralph Hamers delivered today, we spent about 13 minutes in conversation during the interview, was a sense of confidence. Confidence about the pipeline in M&A. I mean, this was a record for them in M&A in the investment bank. Yes, I know everybody's going to go, it's a wealth management company, Manus, focus on that. But permit me on the investment bank, Francine. The pipeline is good. This is a record deal-making session for them. I want to give you a comparison. Goldman Sachs, JP Morgan, their investment bank deal-making was up 83% and 52%. UBS, it was up 223%. Now, it's nowhere near the number of Goldmans, but the velocity in that side of the business. And then if you talk about wealth management, there was a little bit of caution in terms of, look, I'm judicious in all of the assets I look at, and the lending slowed down just marginally.
So, Manus, it was a really good set of numbers. How can they hold on to that? How difficult is it going to be from going from strength to strength?
So two things. A, the pipeline looks good within M&A. They're stealing market share. And this is the interesting part. They're taking market share when it comes to M&A. How the landscape for prime brokerage post-Archegos plays out, I still think it is a big gamble for everybody. What are you doing with leverage? There wasn't a great deal of discussion around that. But it's about lending. Doubling down in America, which is where they've seen perhaps the biggest volume of lending and the biggest opportunity for them. The big strategic review will not come until the end of the year. I was just sitting making a few notes before I came. This is a bank, it's a Ferrari, built by an Italian, driven by the Dutchman. So the question is, it's firing quite literally on all cylinders. You know, if it's not broken, you know, why do you try and reinvent the wheel? I think what we're going to see over the next 6 months, Francine, is what is the Hamers statement of the next step. Jamie Dimon's buying businesses. He wants a digital bank in Europe. What's Hamers going to do?
Manus, I love the analogy. I do know that, Ferrari is becoming more green, but that's another story for another day. You also tried crypto. What was his view?
I tried a lot of things in this one. I just thought, well, let's roll the dice on crypto at the end. Because the Americans, first of all, you got to come back to the office. There's more flexibility if you work for the Swiss, more flexibility if you work for the French. But for the American banks, you're going to have to get back to the office. On crypto, the Americans are ready to offer funds to the wealth management. Time out here. Cautious on crypto, no final decision, but he wrapped it up nicely. And this is what I mean about a bit of swag. FOMO. I don't have FOMO. I don't have FOMO about missing out on crypto. So that's the message from this CEO. No FOMO in the house for UBS.
Yeah, I love that, Manus.
Francine, there's one of a line from Noel Coward. There are black clouds over the white cliffs of Dover, and the rats are preparing to leave the BBC. There's a lot of issues on the table for markets, so a little bit of caution.
I have FOMO. Yeah, Manus, I have FOMO. The background, I don't know if there's
I have FOMO every day.
But beautiful. Manus Cranny there in Zurich with a wonderful interview with the UBS Chief Executive, Ralph Hamers. We'll have plenty more, of course, of that interview throughout the day. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. America should avoid travel to the UK because of a surge in COVID-19 cases. That is the warning from the US State Department. The move comes after the US CDC raised its UK travel alert to its highest level. The country added more than 100,000 new cases over the weekend. Now, vaccine certificates are set to become a requirement to enter nightclubs and other large indoor venues in England from the end of September. The proposal marks a shift for UK Prime Minister Boris Johnson, who's been reluctant to endorse compulsory vaccine passports. Nightclubs in England reopened yesterday. That was for the first time in 16 months as the country swept away virus restrictions. Key Chinese cities, including Beijing, are warning of new power cuts as historic demand and supply shortages strain energy grids. Electricity users have been told to expect planned disruption in order to avoid overloading the networks. China's State Grid Corporation says 11 provinces reported record demand and peak surges last week as temperatures there soared. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, Electrolux slips as much as 9% after its second quarter results. We speak next to the Chief Executive, Jonas Samuelson. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Electrolux has reported an operating profit for the second quarter that missed estimates this morning. The world's second largest home appliance maker is sticking with its regional market outlook for the year, even as it admits component shortages are likely to have a greater impact in the second half. Well, we're now delighted to be joined by the chief executive of Electrolux CEO Jonas Samuelson. Mr. Samuelson, thank you so much for joining us this morning. When you look at some of the when you look at some of the component shortages, has it actually led to you losing business and customers?
Well, we have to remember that we're operating at an extremely high level. I mean, our organic sales growth in the second quarter was 39%. So at those levels, we're operating at the max of, I would say, what the supply chain is able to deliver. And I think the challenge that we're facing right now is to get the right mix of particularly electronic components, semiconductors at the right time. So yes, that is impacting the mix of our output a little bit, and on the margin also volumes. But I think that's the factor for the industry in general, not something that's specific to us.
But for you, is it possible to quantify actually how much sales you've lost, or how much it's affected sales because of the supply because of the supply chain constraints, I would say, and also the component shortages?
Yeah, it's not particularly significant in Q2. It is impacting our cost as there are some production inefficiencies. So sometimes there's some intermittency in supply, so that impacts manufacturing efficiency. There's also higher logistics cost as there's more express freight and flying in components and things like that. So that's impacting our cost. Volumes have been somewhat impacted, quite marginally, I have to say, in the quarter.
Talk to me a little bit about how you think you'll be able to pass on some of the higher prices for consumers, for customers. Are you worried that actually they'll go to other brands that are cheaper because of it, or are you confident that it's okay?
Well, generally, I would say in our industry, and this has been the case for a long time, and we've been quite successful in passing on these cost increases for the last several years. The tendency is that when costs go up for the industry, the price level tends to go up. It's fairly normal, I would say, in a lower margin, let's say, industry where there's no other way to go than to raise prices. And we've done that successfully, and we intend to continue to do that. We've announced additional price increases that we're implementing as we speak, and so far that's going really well.
Is that because of input costs as well? We're trying to figure out where inflation ends up. Do you see the world being in an inflationary environment right now because of the recovery and because of the reopening?
Yeah, I think there's, this sudden spike in demand that we've seen in terms of consumer durables, really globally, not just for appliances. I would say the global supply chains, whether it's for steel or plastics or electronic components, has not been sized for this level of demand, and that results in cost increases. We have to manage through that. We don't think that that's really a long-term permanent situation, because we're not talking about components that have a fundamental lack of supply. It's just that demand right now is outstripping the installed capacity in several categories. And we'll manage through that, through pricing, through managing our promotional programs and so on, to cover those cost increases. So it's not something that is of any particular concern to us.
Mr. Samuelson, I think you've said that the global supply challenges will actually, I don't know if it's accelerate or have a higher impact in the second half of the year. Yeah. What does that mean?
Well, it means that, as we've progressed now with very high levels of demand, meaning that we're operating our facilities on overtime, and so are our suppliers, the supply lines have gotten increasingly stretched. So the margin to absorb variances in demand is lower, as there's very limited component inventory in the supply chain. And that means that any change in mix, any change in demand, we have a lower ability to respond to that. So that could result in a higher impact in the second half of the year.
Mr. Samuelson, I understand this is probably difficult because of the nature of the work of your employees, but how many people are working from home? How do you see that developing for your office workers? Are they back in the office full time, or is there going to be some kind of hybrid system?
Yeah, our office workers still, by and large, are working from home for the majority. We have recently introduced a new return to work policy that we as individual countries are opening up and allowing the return to the office, we will implement a hybrid approach where teams are able to work, a few days a week remotely and a few days a week in the office with a lot of flexibility.
Wonderful. Thank you so much for speaking to us this morning. Jonas Samuelson there, the Chief Executive of Electrolux, joining us. I think the share price is still down some 8% after those results this morning. Coming up, but we'll have plenty more from our conversation with the UBS Chief Executive, Rolf Hammers. We get his thoughts on earnings, working from home, and also cryptocurrency. The broader markets, after the sell-off we had yesterday, they're stabilizing a touch. Actually, stocks are rebounding, earnings rolling in. This is Bloomberg. A big beat for UBS. The Swiss lender sees a surge in its wealth management and investment banking units in the second quarter. Stocks rebound after a brutal Monday as investors reassess the prospects for growth. Bitcoin slips below the closely watched $30,000 level. And the U.S. raises its UK travel alert to the highest level, throwing doubt over its plans to reopen air routes, while Singapore stops inside dining. Good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 20th of July. So growth concerns have suddenly taken hold of the markets as investors worry about the potential spread of the Delta variant. Now, Treasury yields have fallen to their lowest since February, with the 1% mark now likely in sight for some traders. So let's talk markets with our very own Eddie van der Walt, who is a contributor and also in charge of our MLive team. Eddie, thank you so much for joining us. Look, I'm confused because it seems that the market, so yesterday was a sell-off. Today, we're kind of off the lows and regaining a bit of ground. I'm just not 100% sure what they're seeing. I mean, I've heard, it's because the press hasn't been focused on Delta, and now they are. Yeah. The market are always a step ahead. Am I wrong?
No, you're absolutely right. And I think some of that is definitely happening. I think what we're seeing here, on the one hand, is worry over the Delta variant. There's definitely, an increased spread. And that's just, everybody was talking about the reopening trade coming into it. But right now, it's Tuesday, turnaround Tuesday is a known phenomenon in markets. I think that might stick because the mantra in markets over the last 2 years or so has been buy the dip. Every single time, market buys the dip. And I don't see why this time is going to be particularly different. So I think there is worries. There's a lot of reasons to be worried out here, but I think there's still a lot of money trying to get into stocks.
So what would be your main worry? That is it to do with central banks? So we're not really worried about inflation that much anymore, but it's that central banks kind of move too quickly, and the Delta variant means that the economy, that it's difficult to get a handle over this.
It's really interesting. If you look at the economic data, we should be, at peak worry over inflation right now, but we're not. And it's, as you say, because the market is, forward-looking, and the market is a step ahead. And the market's looking at things like the oil price coming off because OPEC's had a deal. The market is looking at things like reopening and saying, listen, we're going to see a pivot away from goods. We're going to see a pivot to services. And if people spend more on services, that takes some of the supply chain pressure away, which I think in the long run, just takes the pressure off inflation. And then, so I think there's a number of reasons why right now, I think that goes away. And that is part of what we've seen, the bid in bonds. But then the bid in bonds pulled some of the money out of the stock market, of course.
We haven't talked about Bitcoin for at least 2 weeks, or at least I haven't with you.
Right.
I mean, it's now below 30,000.
Yeah. Well, Bitcoin is an interesting asset, if nothing else. What it needs people to talk about it. It's a classic Veblen good, which means the more we talk about it, the more people buy it, the more the price goes up. When the price starts going down, some of that oxygen is being sucked out of the air, and Bitcoin struggles to keep rallying. And I think that's what we're seeing here. I think there are also, a lot of other interesting trades that are happening at the moment, and it's just taking away from Bitcoin a little bit. And I think that's why. But I think, this downtrend, potentially it could go further.
So in terms of asset classes, what is there one that you're actually watching more than the others? I know there was, yesterday was treasuries, right? It was all about treasuries, and now we're looking at a possible 1% yield.
Yeah.
I mean, that would be pretty significant.
Yeah, absolutely. Look, I think that's key. I think we're going to see. I think what we're moving back to is, we're going from the reflation trade back a little bit to the everything rally. Because if we say that we're going to see, if we say that we're going to see a little bit of the inflationary pressure come off, then what we say is the central bankers can keep rates lower for longer, which then supports equities and it supports bonds. So I think that's where we're going. I think we're going back to that early post-COVID era where we could see, just an advance in everything for a couple of months.
Eddie, thanks so much, as always. Our Bloomberg MLive team member there, Eddie van der Walt. Now, onto banks, and UBS posted better than expected second quarter profit. It also added $25 billion in new wealth management assets during the period. Manus Crownie spoke to the chief executive, Ralph Hammers, and started by asking him about those figures.
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at 2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum. So clearly the markets are positive, but beyond the markets, the way we deal with our clients, I talk to clients all the time, they need the advice. They're coming out of COVID, they are coming out of lockdown. They want to know, do I have to digitalize more? How do I build my scale? Do I have too much delay on my investments? Do I need to acquire a company? And it's all of that activity that you see both in the markets as well as in our banking activity, in our banking operations.
And certainly on the M&A side in the investment bank, I think it's your best quarter ever. What is the pipeline like? Where are you strongest in terms of mandate winning on the M&A business?
It's literally across the board. Over the last 6 to 8 quarters, we've truly focused on a couple of sectors that we wanted to be our sectors, the TMT sector, the industry sector. And what you see coming through is that focus, and I've been pitching myself in a couple of cases as well, and that real care for the clients and helping them to find the right candidates to acquire, or to find the right way to issue capital. It is that what's paying off right now. And we're actually gaining market share across the board, specifically also in the EMEA region.
Is there pent-up desire to do deals?
Yes, there is a real desire to do deals, but there's also a necessity to do deals, because I think that most companies have been standing still, and we had to stand still in the pandemic. And when you come out of the pandemic, you make your new analysis, like we did it as well, like I did it as well in the first quarter. And all the CEOs are now looking at, okay, guys, where is this world going, and where do I take this company? And then it's always a combination of organic improvement opportunities and inorganic opportunities as well. And that's where you see a lot of the demand coming from at this moment.
On the lending side within the wealth management business, you look at the first quarter globally to the second quarter, there seems to be a slight slowdown. Where are you lending the most amount of money to, and did it slow down?
I wouldn't say it slowed down. We still had the net new loans of 8 billion this quarter versus 11 billion last quarter, which is annualized still a mid-teens.
Okay.
Yeah, so it's really growing fast. We are growing fast in loans in the US, where we are in our wealth business under-penetrated in comparison to our peers, and we see an opportunity there to support our clients. So that's where we see quite some growth in lending. But also here in Switzerland, you see the confidence back in with the people buying houses, and the mortgage portfolio growing as well. So it's a mix.
Well, that's UBS Chief Executive Ralph Hammers speaking to Manus Crownie. Coming up, the billionaire space race continues as Bezos follows Branson and is due to blast off beyond Earth in the coming hours. We have the full story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EasyJet has reported a headline pre-tax loss of just a third quarter for just over £318 million, better than analysts had forecast. The airline says demand in its UK home market remains depressed, pushing it to transfer more capacity to mainland Europe as it looks to salvage late summer bookings. ExxonMobil has recruited a company outsider for the first time to join its inner circle of managers, just weeks after it suffered a stunning setback at the hands of a tiny activist investor. Catherine Meikles will join the oil giant as CFO next month from Diego. She'll be the first woman among the ranks of Exxon's senior vice presidents. And Bloomberg has learned that Apple is pushing back its return to office deadline by at least a month to October at the earliest. The company is responding to a resurgence of COVID variants across many countries. Apple will give its employees at least a month's warning before mandating a return to offices. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Jeff Bezos is only a few hours away from blasting into space on Blue Origin's first manned rocket launch. Now, our U.S. West Coast reporter, Ed Ludlow, has a story from the launch site in Van Horn, Texas.
If all goes to plan, New Shepard will generate 110,000 pounds of thrust, propelling Jeff Bezos, Mark Bezos, Wally Funk and Oliver Damon up towards the Kármán line, 62 miles above Earth. As they approach, the New Shepard booster will separate from the capsule. The capsule will carry on beyond the Kármán line to about 66 miles above Earth. It's not far enough to escape Earth's gravitational pull, so the capsule, after a few minutes of weightlessness for the astronauts, will start falling back down to Earth, using its own air resistance, the flat bottom of the capsule, to slow itself down. There will be some drag chutes that are then fired, and as it nears the Earth, 3 large parachutes will deploy with a sudden burst of air from the air thruster just before the capsule hits the ground. As of Monday evening, all astronauts have completed their brief 2-day training, but as always with any launch, weather, especially here in West Texas in the summer, is a factor. For Blue Origin, it is a substantive step forward in what has been slow progress. Jeff Bezos founded the company in 2000. He acquired the land here in West Texas for the Blue Origin site in 2005. The launch pad for New Shepard was not built until 2014. And in that time, what's happened is SpaceX has really leapfrogged Blue Origin in terms of technology. It's really won most of the commercial contracts from NASA and other private sector partners. And Blue Origin wants to catch up. Providing paying customers just a few minutes of weightlessness was the original goal for the company, but now it's just the tip of the iceberg in terms of the ambition that Blue Origin has. It wants to compete with SpaceX and other private sector carriers for those satellite contracts, for the lunar lander contract for 2024, which SpaceX was awarded and Blue Origin has appealed. It also builds engines for other companies like ULA. And then Bezos has this grand vision of the future where the human race is a spacefaring race and we can look to the galaxy for natural resources. But first things first, an 11-minute flight up to the Kármán line for just a few moments or minutes of weightlessness before buckling back and falling down, experiencing forces of 5 times the Earth's gravity on the way down. Ed Ludlow, Bloomberg News, Van Horn, Texas.
That was our Ed Ludlow. Now, don't miss our special coverage of the Blue Origin launch. That starts at 1:30 p.m. London time. That's 8:30 a.m. on the U.S. East Coast. Now, let's discuss the Blue Origin launch and more on the new space race with Rob Dusborough. He's founding partner of Seraphim Capital. It's a London-based venture capital fund manager thematically focused on space tech. Now, in March 2021, Seraphim Capital also partnered with Amazon on the AWS Space Accelerator program. Its goal was to select 10 startup companies to receive up to $100,000. So, Rob, thank you so much for joining us also on such an exciting day for all space lovers out there. Rob, so you started looking at space tech and space more generally in 2015. I mean, in the last 6 years, that space must have changed so much. What do you think the next frontier is? Are we actually going to use space as tourism, or is it for exploration of other things?
Thanks, Francine. Yes, it's a really exciting day for us. And I think what's so exciting is that these billionaire pioneers in space are really pushing the boundaries of what can be achieved. And for us, space is $1 trillion market opportunity, and space tourism represents a relatively small aspect of that. Really, for us, the billionaire entrepreneurs have completely changed the economics in terms of accessibility to space. They're putting us in a position where they're building a space superhighway, a logistics superhighway, enabling us to build the future digital infrastructure. With space data, it will allow us to map, monitor, measure, and manage every centimetre on Earth and address some of the world's most pressing challenges we have today, from connectivity through to climate change. So we're already seeing nearly $8 billion in private investment being invested into this sector, matched by $7 billion in public investment. So it's a really exciting.
So Rob, what's the most exciting? Yeah, so what is the most exciting part? I mean, if you look at space tech, and as you say, there's a wide range of things that you can be invested in. So there are very different angles for you to look at this. What do you think is the most exciting in the next 2 years?
I think for us, it's actually about how we use Earth observation data, how we can actually map, monitor the planet in near real time, and look at things like crop yield within agriculture, or change detection and mapping when we're looking at how we look at disaster survival and recovery. Or if we move out a few years, how we can look at precision GPS systems for a future autonomous world. So there's many exciting things happening at the moment.
Rob, when you look at, I guess, the today's launch, the launch that we had a couple of weeks ago, does it actually help with investments? Do you see more capital going into the space, again, just because it captures the imagination, or is it still the few, venture capitalists that actually know that have been doing it for a while and know what they're talking about?
Absolutely, I think these are fantastic figureheads for the industry, but they are ultimately building the infrastructure which is allowing startups to now access the space domain and is building out that industry. Amazon and AWS are building a huge cloud infrastructure which is really catalyzing the speed that startups can now build and address opportunities within space across SpaceX, Blue Origin, and also Virgin Orbit. They're reducing the cost to access space for startups as well. So we're really at a point of inflection now, and we're seeing thousands of satellites being launched every year, as opposed to a couple of years ago, we were seeing less than 100. So this is a very exciting period.
Does it make a difference, Rob, if some of the technology that you're looking at is based in the US or based in Europe? Is there a kind of a space tech race amongst the regions?
I think we're certainly seeing a growing space tech race. At the moment, we invest globally through our investment fund. A third of our portfolio is in the US, a third in Europe, and a third in the UK. And I think probably we're seeing the majority of the activity in the US, but the UK is a fast follower there, and is probably third in the world in terms of small constellation development after the US and China. But we are seeing competition across Europe, and other funds are being raised to focus on this opportunity in new space.
Rob, I was going to ask you actually, how does China fit into all of this?
Well, China is somewhere that we all have to be aware of. It's probably second after the US in terms of the amount of venture capital going into that market right now. Clearly, we have considerations with regards to intellectual property and how we engage with China and also Chinese investments as well. Space is increasingly an area that we need to look at from a domain security perspective as well. And we have the national security concerns around that.
Rob, how much bigger do you think Seraphim Capital will be in the next 4 to 5 years? So how much capital can you actually attract as this industry grows and become, I don't know whether we call it mainstream, but certainly becomes more prominent?
Well, it's an exciting time for us. As we launched the world's first venture fund focused on new space. We recently raised a £180 million fund on the main market of the London Stock Exchange. That new fund gives us long-term patient capital, and our vision is to grow that from 180 million currently to over $1 billion over the coming years. We believe there's a very significant opportunity out there, which is demonstrated by the recent IPOs happening in the market, to deploy significantly more capital into this area. There's real appetite, but what it needs is lead investors like Sarah from the space who can do the due diligence and drive these opportunities forward, and that will enable future capital to come in.
Rob, thanks so much. Rob Desborough there, founding partner of Seraphim Capital, joining us this morning. Now, coming up, the do not travel warning. Well, the U.S. raises its alert levels for the U.K. amid a virus surge and the lifting of restrictions. More on variant fears next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the U.S. has raised its travel alert for the U.K. because of the ongoing surge in cases. The State Department issued a do not travel statement after the CDC boosted its alert to very high. They said even fully vaccinated travelers are at risk of contracting and spreading variants. Well, joining us now is our Bloomberg Intelligence senior pharmaceutical analyst, Sam Fazeli. Sam, there are a number of questions now also that the markets are turning on this, that we have on this variant. How different is it to the other one? I mean, do we still know I'm double vaccinated? If what's the likelihood if I come into contact with someone of catching it and still passing it on?
Yeah, so the Delta variant, Francine, and good morning, does have an ability to escape vaccine immunity, that original, the first shield that you've got against an infection, a bit more than the original virus or the alpha variant, for example. Not massively, but certainly it is more able to escape that immunity. But of course, everybody keeps talking about hospitalizations, etc. I think on that front, we're relatively safe. But you are more likely to catch the Delta variant versus the alpha variant or other variants. And that is the problem, I think, that people are worried about, because even if you're vaccinated, you could catch it and then pass on the virus.
And so what does that mean, Sam? Does it mean that actually we're going to see a resurgence in cases at the moment? So the UK's open, England's open, and there's not that many people in hospitals. Is that just because of the time lag, or is it because of the nature of this variant?
No, it's actually partly the time lag, but certainly to do with the ability of vaccines to stop the development of more severe disease. They don't completely stop it, but they have a significant impact. And we just wrote something on that end of last week showing the difference. That is pretty well established. The thing is, you can still have the virus, you can get severe disease, but you certainly can pass it on to somebody else, because this virus has got this strange ability, which has been now discussed a bit more detail in research, of having much higher viral loads in our nasal passages, etc. So you have a much higher opportunity to pass on the virus.
Sam, thank you so much for all of your insight. As always, Sam Fazeli there of Bloomberg Intelligence. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of New York, actually, with Kailey Leinz. We'll look at the markets, we'll look at treasuries. Of course, there are a number of other things we're watching, including the space race. This is the day that Jeff Bezos blasts off. And then I'm also looking at the market correction from yesterday. We're seeing a reversal today with stocks up and futures also gaining. This is Bloomberg.
A lot of investors are buying bonds for almost like catastrophe insurance. If things go really badly wrong and the economies collapse because of COVID or something else, then have some insurance put away.
I feel like the bond market is in a limbo. We're waiting on a whole bunch of other factors to come into play for fundamentals to improve and for Treasury yields to rise.
The real risks right now, one is rates. Prospect is from this point forward, perhaps go higher. Taxes, both corporate taxes and also capital gains taxes. Those are your big risks.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, July 20th. Our top stories today. Having second thoughts about the recovery while long-term treasury rates fell to the lowest level in months. UBS's soaring profits come with a warning. The Swiss bank expects client activity to slow down in the third quarter. And Billionaire in Space Part 2, Jeff Bezos gets his chance to show the right stuff a few hours from now. Well, good morning, everyone, and welcome to the program. There's quite a lot going on, Kailey. I'm looking forward to, of course, the space race to see what billionaire is doing what. But if you look at the markets yesterday, look, we saw concern that was playing out in treasuries. Today, there's less concern about growth because it seems that the markets are focusing on earnings, and it's giving a lift to a lot of the equities.
Yeah, Francine, I'm not sure if the market is no longer just worried about growth. Maybe there's just a little bit of dip buying, but technically nothing is true this morning that wasn't actually true yesterday. And we did in the Asian session see some follow-through selling from those losses we saw in the U.S. The MSCI Asia Pacific Index down about a full percentage point. The big standout from an index perspective was the Nikkei 225 in Japan, off 1%, but actually its fifth down day in a row, entering a technical correction. Of course, fears around the Delta variant really weighing on those cyclical Japanese equities. One individual stock story to watch in Asia, as well as what's happening with Evergrande, of course, the Chinese developer, concerns about its financial health really weighing on investor sentiment. The stock fell 16% yesterday and another 10% in today's session, now at a 4-year low, and the bonds have been taking a beating as well. And in foreign exchange, I would note the big underperformer in Asia is the Singapore dollar, weaker against the U.S. dollar by around 0.25% as restrictions around COVID-19 retighten in Singapore because of the Delta variant. And here in the U.S., of course, it was a pretty wild trading day yesterday. We saw the cyclical stocks in particular under pressure, but it really was broad-based selling. Today, though, maybe a little bit of buying of that dip, with S&P 500 futures up about 0.5%. The real action, though, was in the bond market. The 10-year Treasury yield yesterday falling 10 basis points to sub 1.2%, the lowest level since February. This morning, we are ticking just higher, but still underneath that 1.2% threshold. It is a stronger oil story today. Crude is up about 0.1%, but nowhere close to recovering yesterday's losses of 7.5%. You have supply and demand concerns factoring in, as well as a stronger dollar. And then finally, I haven't talked about Bitcoin in a market check in a while, Matt, but it is worth noting today it is back below that closely watched 30,000 level, trading at 29,700 a coin or so, Matt.
Yeah, I think when it comes to risk assets other than Bitcoin, it's really about buying the dip today. And maybe that's why Bitcoin is down. Maybe the kids are selling Bitcoin, liquidating some investments in order to reinvest in the stock market. Here you see Europe, when we're looking at gains across the board, just like you said with oil, Kailey, they're gains, but they're nowhere close to making up for the kind of losses we saw yesterday. We were down 3% and change yesterday in some of these indexes, and we're up 0.5% on the DAX today. You can see the broader stocks Europe 600 is gaining about 0.6%. German bonds, I think it's interesting, still down to their lowest point since early February. So a drop here in bond yields, negative 41 basis points. The pound also losing some ground against the dollar right now, 136.61. The euro is losing ground against the dollar, as well as the greenback. Basically gains against all other major trading partners. And UBS, I want to point out, obviously we're going to be talking a lot more about this. Manus Cranny interviewed the CEO. The company came out and beat earnings, also adding to the amount of money that it manages. The shares up 4%. They're pretty heavy weights on the Stock 600, so really helping to pull the broader index up, Francine.
Yeah, Matt, there's also a wonderful piece by our John Authors actually looking at some of the authors' indicators to look at inflation. And he says, look, if you see underlying inflation, as we all know, is there. But it's interesting that the market is just not focusing on it that much now. So it feels like they're always a step ahead or maybe a step behind. Let's look at what else is ahead today at 8:30 a.m. New York time. Bloomberg presents a special live coverage as billionaire Jeff Bezos blasts off on board the first crewed flight of his rocket company, Blue Origin. Then a little bit later, the Economic Club of Washington, D.C. hosts a conversation with the U.S. Secretary of Transportation, Pete Buttigieg. And here comes the tech earnings parade. Netflix expected to release its second quarter results at 4 p.m. New York time. So let's begin with the billionaire space race, the part two. Jeff Bezos, only a few hours away from blasting into space on Blue Origin's first manned rocket launch. And we couldn't be happier to have Emily Chang join us live now from Van Horn, Texas. Emily, it's so exciting for actually everyone watching, and you must be very excited on the ground. How different is this going to be to what we saw with Richard Branson?
Francine, it's going to be very different. First of all, I am at Blue Origin headquarters. The rocket is on the launch pad right behind me. We are about 4 hours out now from launch. And if you watched the Virgin Galactic launch, you saw that that was basically a high-altitude space plane, a mothership taking that space plane up, dropping the plane, that plane then going up into space and coming back down, landing on a traditional runway, much like an airplane. The whole flight altogether over an hour. For Jeff Bezos and his crew today, this will be a vertical up and down flight. The rockets that we grew up with, just 11 minutes. A few minutes after taking off, the crew capsule will separate from the rocket, will go on up into space. Bezos and his crew, his brother, Wally Funk, who will become, if all goes to plan, the oldest person ever to go into space, and Oliver Damon, an 18-year-old kid who will become the youngest person to go to space. All of them will experience this 3 to 4 minutes of weightlessness, and then they will start descending back to Earth, parachuting down and landing here, hopefully safely, in a cloud of desert dust. No pilots on board. There were 2 pilots on board the Virgin Galactic flight, but the Blue Origin flight is completely autonomous. So they tell us, even if there were pilots on board, if something went wrong, they couldn't really do anything. And Jeff Bezos and all of these people have been through 14 hours of training over the last couple of days, and they're prepared for all of the emergency scenarios that perhaps could play out. They know what to do in those situations.
Emily, what's the play here for Jeff Bezos? I mean, for Richard Branson, it's clearly like a tourism thing. Elon Musk seems to be kind of a shipping guy when it comes to his space abilities. What does Bezos, want to do with Blue Origin in the long run?
You know, Matt, it's interesting. They all have completely different visions. Richard Branson is entirely focused on space tourism, getting people to pay, whether it's $250,000 a pop or the price goes lower, that much for a ticket for that ride and that ride alone. For Jeff Bezos, space tourism is just part of the story. He has this vision of space colonies being built out in space, and people living and working there, large industry moving up into space and being powered by solar energy out in the solar system. He believes that Earth is the best planet, that we don't want to leave Earth, we don't want to go to Mars, we don't want to live on the moon. Those places are inhospitable. But if we want Earth and civilization to continue to develop, we need to explore space in order to mine these additional resources. And by the way, we did see a cameo of Jeff Bezos yesterday. He dropped off some dinner for the press corps here at headquarters, his mother's favorite family recipe, and someone asked if it was his last meal, and he said, "We're not going to talk about that. And enjoy the food." So, hopefully all goes to plan. As we understand, they have an early refresher course this morning, but now we're less than 4 hours away.
I got to say, he looks like he's in very good shape as well. So, Emily Chang reporting on the ground from Van Horn, Texas. Of course, we're going to be covering this all day. Stay with Bloomberg for full coverage of the launch. Our exclusive coverage starts at 8:30 a.m. New York time. That's 1:30 p.m. in London. The launch is expected just about 30 minutes later. Now let's get back to banks. UBS posted a better than expected second quarter profit, with CEO Ralph Hamers owing the success to new assets and higher fees.
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at $2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum.
Bloomberg's Manus Craney joins us now live from Vienna. So, Manus, what's the takeaway from the incredible quarter that UBS had and the outlook from Ralph?
Matt, I got a real sense of confidence from Hamers and the team. His demeanor was one of, look, these numbers sort of speak for themselves. The pipeline is pretty good in the investment banking side, and they're taking market share in the EMEA division. So that's going to be music to the market's ears. Just some percentages for you. If you think of the investment banking at Goldman Sachs and JPM, Goldman Sachs, their M&A business was up by 80%, JPM up 52%. For UBS, it was up 223%. Not at the staggering numbers of Goldman's, but that just shows you the velocity that when it comes to doing deals and supplying the wealth management side of the business, it really is a bullet train that is moving. On the wealth management side, it's about lending. Okay, the overall lending number dropped relative to the first quarter, but I got a sense from Hammers, both during the interview and offside, is that there is this pent-up demand. Here in Switzerland, there's remortgaging. They're lending with gusto in the United States of America, and that's where they're going to double down. Perhaps nothing as sexy as Bezos and flying to the moon, but this is a pretty powerful beast of a Swiss bank which is moving. Look at the stock price. Hammers is going to have to develop some kind of strategy that really reignites the pricing of UBS, back up to the 20 Swiss francs a share. That's the ambition. And that's going to take a certain amount of re-engineering and perhaps some deals. Jamie Dimon wants a digital bank in Europe. What's Hammers going to go after?
All right, we're trading around 13.88, up 4% today. Bloomberg's Manus Craney, thank you so much. And turning back to the markets, investment strategists are starting to consider a new bearish scenario that the economy has already hit its speed limit. Bloomberg macro strategist Laura Cooper joins us now for more. So, Laura, is that what we can chalk up yesterday's move to, just fears around slowing growth?
Well, certainly, I think peak growth fears in the U.S. did play into the bond rally extension that we saw yesterday. That was kicked off by those renewed restrictions across Australia. We did see that spread through Europe. But again, this is a U.S. 10-year Treasury yield that remains about 60 basis points below its February peak. Now, that indicators do suggest that's largely flow-driven, less than fundamentals. We do have pension demand, hedging protection against those peak growth fears. But again, it's really the question of, yes, momentum does suggest we could see a 10-year Treasury yield of 1%, but is that really justified against this still robust economic backdrop?
All right, Bloomberg's Laura Cooper, thank you so much. And turning now to some of the micro stories in the market, stocks moving in pre-market trading here in the U.S. I want to begin with IBM, which reported earnings after the bell yesterday. The strongest sales growth in 3 years, thanks to the shift towards cloud computing. As a result, that stock up 3.8% in early hours. Another stock moving to the upside for a second day is Novavax, of course, the COVID-19 vaccine maker, up 13% yesterday, up another 3% this morning, aided perhaps by concerns around the Delta variant. And of course, those variant concerns weighed on the travel complex yesterday. And actually not just yesterday in the case of Norwegian Cruise Lines. It's lost 20%, falling every day in the last 6 sessions. But maybe some dip buying coming in today because that stock is higher by 2.4% in early hours, Francine.
Yeah, I don't know who'd get on a cruise line right now. Maybe, I mean, okay, that's conversation in
Matt has
3
no fear.
minutes. We'll talk about where would you go? Maybe the Black Sea or something exotic. Maria Feitman, she's coming up next. We'll ask her about travel and leisure. She's senior multi-asset strategist at State Street. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York. Francine Lacqua is in London. Now, we saw a big sell-off yesterday, and today the kids are buying the dip. But Dan Curtis, who produces charts for us here in the Big Apple, has shown me that puts outweighed calls 2.5 times, and that's the highest ratio of puts to calls going back over a year. So what this shows you basically is that investors are either betting on a drop or hedging against the possibility of a market decline. You have to wonder why, since they seem to buy the dip every time we see a drop of 3% or more. I think that's happened 4 times over the last 12 months. And investors, maybe it's retail investors, maybe it's the youth on Robinhood, buying, especially in ETFs, and just driving us back up to new records each time. Joining us now is Maria Feitman, a senior multi-asset strategist at State Street, to talk about this. Maria, you've been bullish every time we've had you on. Why, though, especially in light of a record number of new COVID infections in the UK, 2 years into the pandemic, are we buying the dip still?
Yeah, hello, Matt. Hello, everyone. And you can always count on me to recommend to buy the dip. Yeah, of that ilk. I mean, to me, the really key drivers of this equity rally in the last 6 months. I think every strategist was really, really bullish on equities in kind of December and year ahead outlooks. Were three reasons: were better economic and earnings growth, very low interest rate, and lots of money on sidelines. We're 6 months into the rally, stocks very, very close to all-time high, but those three drivers are still there. We just started the earnings reporting season, and the result, I mean, not many companies reported so far, but results are very, very encouraging. Analysts are really excited about earnings. They're upgrading this year forecast, next year forecast, year after forecast. So it is very positive sentiment. I mean, interest rates are very low. Real rates have rarely been lower, and money on the sidelines are still there. We know companies and corporates have lots of cash to spend and invest.
Yeah, and you're right. If you look at the financial conditions, they also remain very accommodative. I don't know how to say that word. But Maria, at some point, I mean, when do you not buy the dip? So what would it take for you to say, actually, I'm going to sit this one out?
I think once one of those three kind of arguments follows, that would be a risk. I have to say, we spent quite a lot of time in the last kind of 3-4 months worrying about what higher interest rates, what more hawkish central banks will do to equity markets. And that was a concern because a lot of kind of rally recovery is based on those accommodative conditions. I think I got it right. Right now, real interest rates are fairly low, and earning sentiment is very strong. And for us, what I'm really, really excited is this capex cycle can potentially be coming online. We had corporates underinvesting for a decade, government underinvesting for a decade. Now they're awash with cash, and they're about to spend. So for this earnings season, actually, that's something I'll be looking for to see what companies are talking about capex plans. We know the leading indicators for capex are quite elevated. Capex kind of expectation, lending conditions are very kind of encouraging.
Maria, that's all great on the equity side, but then can you just ignore the cues you're getting from the bond market?
I think this is a very interesting point, because those markets are a little bit in kind of disconnect. And we had a little bit of that situation last year as well, when bond market was quite worried. But I think accommodative, very low interest rates is actually a boon for equity market. I mean, no, equity right now is very long duration based. So having a lower interest rate is actually quite helpful for stock market.
Maria, thank you so much. Maria Feitman there, Senior Multi-Asset Strategist at State Street. Now, tonight, also on Bloomberg, JP Morgan's Mary Callahan Erdoes shares her wealth management tactics on Bloomberg Wealth with David Rubenstein. That's tonight at 9 p.m. in New York. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller and Kailey Leinz in New York. Now let's get straight to the Bloomberg First Word News. And Senate Majority Leader Chuck Schumer has locked in plans for a cliffhanger vote today on whether to begin debate on the $579 billion infrastructure bill. Now, senators in both parties haven't agreed on the measure yet. The vote puts pressure on the bipartisan group negotiating the measure, but Schumer also runs the risk of an embarrassing defeat. And Treasury Secretary Janet Yellen is urging regulators to act quickly on stablecoins. That's a type of cryptocurrency that's seen rapid recent growth and remains largely unsupervised. Now, stablecoins' value is fixed to a national currency or commodity and is actually backed by reserves of that asset. The U.S. government is warning Americans to avoid traveling to the U.K. That's because of a surge in coronavirus cases involving the highly contagious Delta variant. Now, the warning came on the UK's so-called Freedom Day, when the pandemic-related restrictions were lifted. And Bloomberg has also learned that Apple is pushing back its return to office deadline by at least a month to October at the earliest. Now, the company is responding to resurgence of COVID variants across many countries. Apple will give its employees at least a month's warning before mandating a return to the office. Now, I know all three of us have tried to figure out exactly when the banks expect staff fully back, and that has also an impact on what kind of talent you can attract. And then I think Singapore just hours ago saying that they will restrict indoor meetings.
I wonder why. I mean, if you just say you need to get vaccinated and then come in, everything will be cool, right? As long as you're fully vaccinated, especially if you're taking PCR tests. I don't know why they take so long seemingly here. In Germany, you only need 5 or 10 minutes to get the results, but then you could easily have everybody back in the office.
Yeah, but I think that's the question, Matt, is are you really fully protected if you are vaccinated? That was what we saw with that warning from the U.S. around travel to the UK, that even if you are vaccinated, you still pose a risk to yourself and others. So I think that's still an open question.
I always pose a risk to myself.
And businesses... I'll leave that comment there, Matt. I'm not going to respond.
I mean, you're going to be okay. You're going to be okay, right?
Well, we don't know that. I think they're still doing the trials. At least that's what our Sam Fazeli told us earlier this morning. But we'll dig deeper. Coming up, we're just hours away from the Blue Origin launch. Up next, we speak with Danielle Wood, director of the Space-Enabled Research Group at MIT. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller and Kailey Leinz both in New York. Matt, of course, if you look at the market, yesterday was a big markets day because of the sell-off. We looked at treasuries, now chatter that the treasury yield could go to 1%. I don't know whether we're buying the dip or the market, participants are buying the dip today, or whether they're focused on earnings. A lot of them in Europe coming in better than expected to kind of drive the narrative forward for growth being robust.
Right. Well, I mean, earnings were coming in better than expected yesterday as well, and earnings come in better than expected every single earnings season. So, I really think it's got to be buy the dip, because yesterday we said the market was down because of COVID. Today, are we less terrified of the spread of the Delta variant? I'm not sure. Judging by our conversations, I would say we're definitely not less terrified. So it's got to be that there's just this incredible inflow, and we got a great story about it on the Bloomberg, especially in ETFs, especially retail investors, just in the accumulation phase right now. And every time they see a dip about 3%, they fill that gap and push us to new records.
Yeah, I mean, we have a great, of course, live blog going. So if you're a Bloomberg terminal user, I suggest you go to check out MLive. And they're talking about the fact that cyclical stocks are still suffering some longer-term damage, maybe. Kailey, what are you seeing in the markets today?
Well, it's interesting, Francine, because when it comes to those cyclicals and some of the reflation trades, you do have shops like JP Morgan saying the selling has been overdone and therefore a resurgence is coming. So we'll see if that is true. Maybe the selling was overdone for the equity market yesterday in that people are coming in to buy that dip today. As you were just discussing, the stock 600 in Europe up about 0.5%, as are S&P 500 futures, with about 4 hours to go until the U.S. Open. The bond market is where the really interesting action has been, though. A 10 basis point decline on the 10-year yield yesterday to sub 1.2%, and we are still below that level today, sitting at 119. What is the bond market trying to tell us about growth? And finally, just noting Bitcoin as well, because it is back below that $30,000 threshold, very closely watched. And of course, that is weighing on some crypto-tied stocks in pre-market trading here in the U.S. Riot Blockchain, Marathon Digital, Coinbase, all in the red today. One stock moving to the upside, though, is IBM. It, of course, reported earnings after the bell last night. The strongest sales growth in 3 years, really because of the cloud computing shift the company is making under the new CEO, Arvind Krishna. So that has the stock up about 4% in early hours, Matt.
You know, the Bitcoin story, I think, is really interesting. And I was talking with Anna Edwards on Bloomberg Radio this morning, and she suggested one possibility that I hadn't really thought of yet. Here you can see a Bitcoin chart. And for those of you listening on London DAB Radio, we welcome you. And I'll just say, we know it jumped up last year, came to about 65,000 and has been coming down ever since, but has been stuck in the kind of $30,000 to $40,000 range for the last few months. Now we're down below 30,000 for the first time in over a month. And Anna said maybe this is investors liquidating some of those crypto holdings in order to buy stocks, in order to buy the dip. After they saw yesterday a 3% plus drop in Europe, a 2% plus drop here, they went in with their Bitcoin cash to buy stocks. And I thought it was really interesting. That could be a possibility. I will note, Francine, that technical analysts say we could come all the way down to 20. They see Bitcoin trading in a range of $20,000 to $40,000 over the next 6 months.
Yeah, really interesting. We'll talk a lot more about the markets and, of course, I guess the parallels between equity and maybe some money going out of crypto. Now, the designer of Blue Origin's new Shepard rocket views today's launch as an early step in a generation-spanning vision. On the eve of Jeff Bezos' trip to space, Kailey Leinz sat down with Bloomberg technology anchor Emily Chang.
We don't think of it as a race at Blue Origin. We are in this for the long term. And by long term, I don't mean 5 years. I don't mean 10 years. The vision of Blue Origin is generation spanning. I will not see it happen in my lifetime, maybe not even in my children's lifetime. That is how long the horizon of Blue Origin's vision is. And I'm very excited to be part of this early step, but it will keep on going.
Well, joining us to talk about all of this is Danielle Wood, assistant professor at MIT Media Lab and director of Space-Enabled Research Group. Danielle, we couldn't be more excited to have you on a day like today, so thank you so much for making the time. What exactly does a space exploration turn into? I know you believe this could be used for the greater good. We're also getting a lot of viewer questions saying, look, are we going to see some kind of compensation for some of these CO2 emissions? So what will space travel tourism look like in the next 5 years?
People often ask me why it's important to invest in space infrastructure when there's many challenges on Earth. I want to remind listeners that it's important to consider the government investments in space made around the world and how this already provides us with important infrastructure for some of our key needs on Earth, monitoring the weather, improving communication and positioning, responding to disasters, and even transferring some of the innovations that come from human spaceflight, helping us understand how the human body works in microgravity, developing new materials. The activities we see from companies like Blue Origin and SpaceX are contributing to advancing the number of humans that can go to space, but they're also building on many years of both their own research, about 20 years each, but also government research that's exploring what does it mean when things, animals, plants, humans, travel to space. There are research activities also happening through these kinds of flights. Blue Origin, for example, allows researchers, including like myself, to do experiments on their flights outside of the human space flights. And so they're also expanding our scientific knowledge.
What about the idea, Danielle, that, you know, not that we have wasted this planet and need to find another place to live, but that we need to do less of the heavy industrial work here, less of the resource mining here, and that we can find ways to do that out in space?
This is an excellent question. I would like to argue that we should do our very best to preserve and to conserve our planet here on Earth, but also we should apply the same standards of behavior for how we conserve resources when we go beyond Earth. Already, we have examples of the ways that humans have put many, actually hundreds of thousands, if not more, pieces of human trash in orbit around the Earth. So we have not set a good standard so far for how we treat the space environment. A place like the moon is very pristine and really driven by geologic processes that we're still discovering and understanding. But I recommend that we don't immediately assume the moon is a place where it's, quote unquote, morally okay to immediately create a lot of heavy pollution as opposed to Earth. I think the moon and Earth and orbit around the Earth are all places that are shared. This is part of United Nations treaty language, and we should consider how to keep all of them clean rather than moving our trash, for example, to a different place.
Danielle, we talk a lot here at Bloomberg about the billionaire space race and how it's all about, you know, two men, Jeff Bezos and Richard Branson, and Elon Musk is in that equation as well. Do you see what they're doing at SpaceX, Blue Origin, Virgin Galactic as advancing humanity's push into space broadly, or is it just advancing their own ambitions?
I think it has the potential to contribute, but if it's part of a bigger ecosystem that includes governments, universities, and companies, and of course nonprofits and people bringing points of view and philosophy, and even, I would say, indigenous communities that have a view on what we do in space. So the companies we're seeing, many of them were founded in the early 2000s, and they've been diligently working, sometimes with close collaboration with NASA. For example, we see SpaceX working very closely with NASA as part of the development and for providing services to NASA to bring crew to the space station. And this is not an isolation. The space community is very much a series of integrated organizations. So space is a global commons, and we have UN treaty language to show this. And when the services provided are to the broad public, this can bring benefit, but this is yet to be seen for these companies.
Danielle, what do you see as the most exciting piece of space technology that we're currently working on?
Well, I have to say I'm a little biased. I'm really excited about my team's work trying to bring beeswax as a fuel for satellites, which we're actually testing, to be in full disclosure, on a Blue Origin rocket coming up. But I'll also highlight opportunities to ask how humans can live and work successfully in space. The International Space Station is a great example of international cooperation. Really, in the year 2021, we've had people from multiple countries living together peacefully and productively, doing many kinds of research on the space station, trying to understand how to recycle food and water processes so we could have longer-term life in space. And this is all preparing for a more, in a sense, renewable way of living, which could also bring back to Earth.
Danielle, thanks so much. We're also getting a couple of questions from viewers asking about, mining helium. So we'll have to get you back on to talk about some of these techs actually and how we could use them going forward. Danielle Wood, there, director of the Space-Enabled Research Group at MIT Media Lab, joining us. Now, stay with Bloomberg for full coverage of the Blue Origin space launch. That starts at 8:30 a.m. in New York. That's 1:30 p.m. in London. Coming up, though, Dr. Anthony Fauci pleads with the American population to get their shots as cases surge in states with low vaccination rates. More on that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later on today, NASA Administrator Bill Nelson. This is Bloomberg.
What we're seeing now in this country is a significant uptick in infections, particularly in those areas of the country, those states, cities, regions, counties that have a very low level of vaccination. Whereas in contrast, in those areas with a higher level of vaccination, we're seeing less of an uptick. But among unvaccinated people, that's a significant risk. And that's the reason why we are practically pleading with people to please, if you're not vaccinated yet, seriously consider getting vaccinated.
That was NIAID Director Anthony Fauci raising the alarm for the American public to get vaccinated. Joining us now is Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. So, Sam, they want people to get vaccinated, but even if you are vaccinated, are you really protected against the Delta variant?
Yeah, I see. So the critical thing to think about here is what do we mean by protection? First of all, no vaccine has ever purported to be 100% effective against anything apart from very severe infections or hospitalizations, when we saw that back in the early days of the vaccine data coming out. What we have now is a potentially higher risk of infection with the Delta variant, but a similar level of protection against hospitalizations, irrespective of what variant you're looking at. So that's the data that we have to think about. Do we care about mild infections as much as we care about hospitalizations?
So, and Sam, do we care about, we care about transmission. So if you're double vaccinated, can you transmit it?
Yes, you can. Of course you can, especially with the Delta variant. To start off with, the Delta variant in an unvaccinated person has about 1,000 times more, in a recent study that was published, virus in your respiratory tract than the ancestral variant. So it might be not that much more than the alpha that it took over from in the UK, for instance, and many other countries, but it's certainly higher. That means every breath that I breathe out, irrespective of whether I'm vaccinated or not, if I'm infected, will have higher virus number of copies in it than if I had been infected with a previous version.
But Sam, what we learned from the U.S. yesterday was that if you're double vaccinated, it protects you at the margin. But here in the U.K., because this variant is so prominent, you still have to, be socially distant. So what is the U.K. or what is the, in England now we have Freedom Day, everything's reopened. What's the situation going to look like in 2 months from now?
Oh, gosh, if the government is lucky and all the modeling works out as they have hoped, the expectation is that there will be a peak in cases in the next 2 to 4 weeks. And I think we heard that from the Prime Minister yesterday. A site or an analysis that I follow called the Zoe COVID symptom study does seem to now show that there is a turning of the curve. But frankly, that is not reflecting the football finals yet. It's not reflecting the full reopening. So the expectation is this is going to go to 100 to 200,000 cases a day before it peaks.
How bad is it if you're fully vaccinated, Sam? What's the case fatality rate or how sick are people getting?
Yeah, so the effectiveness of the vaccines against hospitalization or severe disease, Matt, is not much different between the Delta and the Alpha variant. The problem, of course, is that you're going to end up having more people infected, even if they're vaccinated. So you'll have a higher number of people who were double vaccinated who will end up in hospital. And but in general, you're still at the 80-90% level for the Delta variant.
Sam, thank you so much. Sam Fazeli there from Bloomberg Intelligence. Now, coming up, a sneak peek at tonight's conversation with JP Morgan's Mary Callahan-Erdoes on Bloomberg Wealth with David Rubenstein. And we'll talk to her about markets. That's coming up next. And this is Bloomberg.
As you say, the markets are very healthy right now, given the liquidity that has been infused all across. I mean, we had a recession that was 5 times greater than the average recession in 25% of the time, right? It happened so fast. And yet our response to it was to add deficits to the United States government that were greater than the last 5 recessions and the deficits that came about. So we've had policy responses that are unprecedented here. And now we're seeing that play out in the marketplace. And so when you have things like Dogecoin, which were created as a joke and are now, $30-40 billion worth of value, you have to ask yourself, is it the liquidity that is sloshing around the system that's causing this? Or are these real new things that are happening in life? And only time will tell the answer to all of those questions. But it goes back to one of the most important things that you pointed out, which is diversification. There's just no way to be able to know everything that's going to happen in the future in every single asset class. And so the most important answer is proper diversification of these portfolios.
If somebody comes to you and says, I want to invest in cryptocurrency, I'm willing to lose the money, but I just really love cryptocurrency, do you say you shouldn't do it, or do you facilitate it, or are you still evolving your position?
So blockchain technology, which is the underlying piece of all this, it is very real and is changing all of the ways that we digitally interact with the different financial markets. Digital currencies are new. And in general, digital currencies are being debated as to whether they're an asset class or not. And a lot of our clients say, that's an asset class and I want to invest. And our job is to help them to put their money where they want to invest. So it's just it's a very personal thing. We don't have Bitcoin as an asset class per se, and time will tell whether it has the store of value, but the volatility that you see in it today, it just has to play itself out over time.
Now, for more lessons in wealth management from Mary Callahan-Erdoes, watch Bloomberg Wealth with David Rubenstein tonight, 9 p.m. New York time. Now, you can also learn a thing or two by listening to Tom Keene, who's on shortly, co-anchor of Bloomberg Surveillance. Tom, what are you looking at, actually? What's your chart of the day? Equities.
Well, we're looking at the markets here, and it dovetails in, of course, is what we'll do with the space coverage starting about 8:30 this morning. And as they get ready down in Texas, Emily Chang is down there on the shores of the Rio Grande to keep it narrow in West Texas. But we're looking at the markets and the recovery today, and I wanted to put in perspective, Francine, where we are in terms of correction. This chart is way too complicated. All you need to know is yellow is a correction, red is a bear market off the Dow Jones Industrial Average, and we're nowhere near that, down 3%.
So are we back at the everything rally?
Well, I don't know. Time will tell. But the answer is we've certainly lifted off here. I watched the VIX, the volatility index of the Standard & Poor's 500. John Farrell lectures me that it's a better index than the Dow. Certainly in times like this it is, Francine. And we went out to 25 worst case, and we've come in better to a 21.85 right now. So let's say it's a third of the way back from agony.
We're at negative 111 basis points, negative 110 basis points on real yields, Tom. Pretty close to, what, an all-time low. What does that mean about the economy? What are you hearing?
It means two moving parts here. Obviously, the growth scare, Matt Miller, yesterday was a huge deal. But what I would suggest is it's about the movable nominal yield and also movable inflation. And the number one issue right now is the nominal yield, the actual 10-year yield, 1.17%. Can you imagine a 0.99%? And Matt Miller, to Germany, I would note today the German yields roll over and continue to roll over.
Yeah, I thought that was interesting. Could we see a bounce in U.S. yields? And I think we're looking at negative 41, negative 42 basis points on bonds.
Yeah, I mean, absolutely. And it's a dynamic. Francine, I got to be polite to Miller visiting in New York. We may go out for a beverage of my choice tonight. I'm going to ask Matt if we should pay in Bitcoin.
Well, we would be able to drink less.
Well, if you find a bar that accepts it.
Yeah, well, somehow I think Matt Miller can find a bar in New York City that accepts Bitcoin.
I think we'll go someplace where we don't have to pay. You know, just put it on the account.
Possible.
I'm looking forward to hearing about this more tomorrow morning. Tom Keene there, Bloomberg Surveillance there. Now, I look at what else we're watching today. Matt, space race.
Yeah, I mean, I think it's really cool that we're seeing now kind of a third leg of the business, if you will, right? Because we've seen Elon Musk now for years towing cargo and passengers out for industrial or research purposes. Then we saw Branson with his first flight. Clearly, that's going to be more of a tourist business. And now we're seeing Bezos. This is really just the beginning of what Blue Origin wants to do. And, you know, the sky's the limit, or the sky's no longer the limit, I guess. He could be looking to mine resources out in space. He could be looking to do some heavy industry out in space, basically trying to save the planet by moving a lot of the infrastructure off of Earth. So I think it's just really cool to see one more piece of the space race.
Yeah, and I'm looking forward to, of course, our special coverage, which starts at 8:30 a.m. New York time. Matt, I'm also looking at Netflix. So we talked about it last week, because I think it was last Wednesday, where we had this great Bloomberg scoop saying that actually Netflix was going into games. And in the last 7 days, I have to say Netflix foray into gaming is raising a lot of questions, a lot of eyebrows amongst analysts, because they say that they don't have a game catalog, that Netflix so far hasn't cultivated a base of gamers in their audience. And we spoke, for example, to Lewis Ward of IDC, saying they also don't have an internal studio or infrastructure to handle a service. So it'll be interesting whether they talk about that today when they release earnings. It'll be interesting also to see what the rest of the business and the streaming is going. So it's also Big Markets Day, Matt. So of course, Tom, John, and Kailey will look at treasuries.
Yeah, well, earnings continue to impress, and maybe that will be the narrative for the day. With Netflix, I wonder how much Drive to Survive is a contributor, especially after Lewis Hamilton almost killed Max Verstappen over the weekend.
Yeah, Bloomberg Surveillance. I don't know if they'll talk about Lewis Hamilton, but they might. Bloomberg Surveillance up ahead. Kailey Leinz, Tom Farrow, and Jonathan Farrow and Tom Keene. This is Bloomberg.